All right, what's up, traders? Welcome back to week 4 of my FundedNext one-step 100K challenge. Now, this week was a very good week. I'm really proud of myself for it, only because the first 3 weeks were all losing weeks. First week was just a very small losing week with 2 losses. And then we had week 2 and week 3, which were just loss after loss after loss. I think there was up at 1.8 losses in a row. So lucky my risk management model is on point, because the challenge, the account is set so that I could literally have these kind of losing streaks and not breach it. So I'm all about the skill set of bringing yourself out of drawdowns. So even in a very deep drawdown, I'm not going to be doing a reset on this account. I'm not going to be just buying a new challenge. I'm doing this challenge until it either hits profit, my 10% target, or it hits max loss, right? So very strong risk model, which I'll go into a little bit more detail in this video. I've also talked about it in all the other videos as well. This week we had 2 winners, 1 loss, and 1 break even. So I want to get and show you right away, but overall, very solid week. It was challenging at the start to try to get that confidence up again, to believe in my edge and believe in the strategy after having so many losses. But now feeling really confident in passing this challenge. Whether it's next week or the week after, it doesn't really matter. It's all about just executing and placing the right trades at the moment, only on when my signal flashes and all my entry confirmations are met. So this week I didn't break any rules. It was very much to the T, executed perfectly. Although my break-even trade was a break-even trade, and it came back to actually take profit, I'm okay with that. It's a little bit frustrating because, yeah, that could have been 3 winners and 1 loss. Would have been a phenomenal week, but I'm okay with that because I know that my edge over time, that when I move my stop loss to break even after it's had quite a decent move, and generally if it hits this particular first target, that's why I bring it to break even. And generally, if it comes back to break even, that entry point, it'll result in a losing trade. This one, different. It came back to it and almost just bounced straight off that entry point again, and took profit. But I'm not worried, because it's all about managing risk. I'm not here to gamble and get lucky on trades. I'm here to just follow my edge, and my edge tells me that once it hits this first target, I move my stop to break even, and whatever happens, happens. Still a very successful week. Now, without further ado, let's get into the charts, and you can have a look at the dashboard, and we'll have a look at some of those trades as well. All right, so here's the FundedNext dashboard. So in the accounts, you can see this is my account, challenge account, 100K. Now I'll enter into it, right? You can see, first of all, my name, Tony Strugar, 1 step, 100K, initial balance, 100K. Yep, it's a swap account, which means I pay for the swap fees each day. Now you can see right as of now, it's 3.34% in drawdown. So last week it was in 4.2. So it's nearly a 1% gain, right? Nearly 1% profit on that last week, week 4, that is. So now you can see daily loss limit still ongoing, haven't breached it, max loss, haven't breached it, profit target, haven't hit it, and it's obviously past its minimum trading days. Yeah. So looking at the journaling, you can see all these trades here. Now, this was most recent ones. So what do we got here? So Euro CAD. Now this is this week. Where the week ended off is, actually, let's look here on my journal itself. So these are the trades from this week, from week 4, from the 17th. That's the entry date. So it was USD CAD, GBP CAD, GBP NZD, GBP USD, and Euro CAD is this week. So I've already had a break even trade this week, but let's go here. So USD CAD, just so you guys can see, I'm not fudging any of this shit, right? So USD CAD, so a 0 return. Right, USD CAD, I've got a 34 loss here. It's break even because this is just the fees and the swap involved. So as you can see, FundedNext have got it as a 0, obviously because they don't account for the fees and the well, that tells you the commission, but the swap fees is what made it be into the $34 mark. So that was this week, right? As in week 4 that we're reviewing right now, and then we had the 606.75. win on GBP CAD, and the 608 win on GBP NZD, which you can see here, GBP CAD and GBP NZD. Now these are the after fees, right? The after fees amount. So pretty much a 1-to-2 profit, risk reward, and a 1-to-2 here again on both those trades. Risking only $300 at the moment. I'll get into my risk calculator why, for those who haven't watched week 1, 2, and 3, but it's a $300 risk right now. Yeah, and I'll explain that in a second. But the loss we had was GBP USD 300, right? GBP USD 314 with fees, obviously. That's your loss. So those are the trades: break even, win, win, loss. Break even, win, win, loss. These ones are open. These are the ones I'm in right now. And this Euro CAD was the one I've got here for this week's break even. Now, right, remember how I was just talking before about trades hitting that certain level that I'm waiting for before I can move my stop to break even? Well, it's that's what's happened there. For that one, I've moved the stop to break even for Euro CAD, and it's actually in profit now. But I'm out of the trade. I am actually in that on one of my other accounts, and that's not because I wanted to. That was because literally I'm managing multiple accounts, and it gets freaking hard doing this because I actually forgot to move my stop to break even for that trade, and I'm still actually in it, which has worked out good, but I don't like it because that's actually a bit of a failure on my execution there, on my risk management. But like I said, it gets hard managing multiple accounts. My funded account is this one here, this challenge is my priority, which is why I definitely moved that to break even. And the other one, although it's a live account with real money, I had that lapse there, so not good, but it's a winning trade now. Still unrealized winning trade. But those are the trades, right? And you can see the previous weeks, like week 3 we had a really nice win, but then 3 losses here, and that win was pretty much negated by all these 3 losses. But then we had a win, then we had a loss. So it's been like the first couple of weeks, fucking loss, 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 loss. Nice big win, loss, loss, loss. One thing you will see though is my risk management is on point. Right, I have a dynamic risk model, which I'll talk about, which is why it started off at that 650, 500, gets lower. Once I hit my risk floor, is the lowest amount I will go for risk, which my risk floor on this account is $300. I stay there. So this was pretty much at that $300 risk floor, but it was a 1-to-3 trade, or just a bit over that actually, 3.5. And then we've had, I've maintained it. Other than this massive psychological error, which I document on my channel, have a look. But other than that trade, the risk management has been impeccable. I'm very proud of my risk management and my discipline in not going on tilt, sticking to my risk allocation per trade and not going over that, because that's what's going to make me have longevity in this game, right? So yes, it was a bad start. This week, if you just look here, that's a very nice week, right? And even that's really nice. So last week, as you saw, it was almost a 1% gain. Now I'm not going to really look at those trades because I've already taken taken the stuff off the charts. But I will show you that open one, and I will show you this Euro CAD long that a move to break even, but it's still running right now. All right, so I'll show that real quickly, but before I show the charts, let's look at that risk calc. All right, so you can see my risk calc. Now a lot of shit happening right here, right? We've got starting balance. All this calculates it properly for me. Starting balance, max drawdown 6, risk reward multiplier. That's my aims target is a 3. We've got a risk. The buffer is what this means is that the way I calculate my risk per trade is whatever my max loss amount is, whatever's remaining for the max loss amount, I will trade 10% of that max loss. So when the account starts and it's a $6,000 max loss, or 6% on the 100K account, I will risk 10% of that 6,000, which is $600. So that's why these are risked at this amount, right? That's $600 risk. It's 10% of my risk, my maximum risk, right? So as the account goes into drawdown, because the next trade, the balance is less, I'm risking a little bit less. And some people have got a big problem with that. It's like, oh, well, you're never going to drag yourself, you're never going to pull yourself out of drawdown if you do that. No, no fucking way. I actually don't believe in that, because what you'll find here, although that might be true in some people's eyes, what it does, it prolongs your account, right? So trading is about capital preservation just as much or even more so than it is about capital growth. You need to stay in the game. You're going to have periods of losses, you're going to have periods of wins. So what you want to do is stay in the game and not lose. So that's why I have a problem with people always doing resets and buying new accounts when their challenge or their funded account goes into drawdown. Like I've got a funded account, and it's in drawdown, a CK Capital, but I'm not doing a reset on that. If I don't pull myself out of it, whatever. But the reason I'm not is because you need to trade these like it's your own account. You want to build this, you're trying to build a skill set, right? What if prop firms disappear one day and you, over the last 5 years or whatever, how long your journey is, you just always, I'll just do a reset. I'll just reset. I'll just buy a new account. I'll just, you don't even try to build the skill of getting yourself out of drawdown. What happens if your prop firms go and you have to trade a live account? You can't do that. You're going to get into a drawdown, but you can't just go, I'll just, whatever, I'll just start a new account. That it doesn't work that way. You need to be able to build the skill of getting yourself out of drawdown. So what this risk model allows for, it allows for me to have so many losses in a row. Like with my model of what I just said, that 10%, risking 10% of whatever my remaining max loss amount is, I can literally have from 100K to the max loss level of 94,000 on this particular FundedNext account. I could have 17 losses in a row before it breaches the account. 17. It's probably not going to happen. If it is, you should be, really looking at your strategy. But I could have 17 losses, and from the time where it gets down here, if I have 17 losses, it literally only takes 6 wins to get it back to break even. So 17 losses to 6 wins. Yeah, you might not, if you were having the same amount of risk per trade, it's going to be a little bit different, but that's an exponential growth on the way up, but a nice smoothing drawdown, which is, for me, makes much more sense. And all this is just a way for me as a visual to just remind myself when I have a losing streak. Hey mate, Tony, it's okay. You have a losing streak. You're not out of the game. All you need is a bunch of winners and you're good. Because if you can have a losing streak, you can easily have a winning streak. Now this one shows a 1 to 2 example. So 1 to 2 risk reward. And this one's showing a 1 to 3, right? So on a 1 to 2 risk reward, still 17 losses on the way down, 9 wins to recovery, right? But my little calculation here tells me every single trade, how much I have left to break it, to breach the account. So I have, based on my current balance, I could have 9 losses in a row right now, and that's the point where the account will be breached. The challenge will be breached. That's a lot. I had that already, but and if I lose it, I lose it. But this is just a good little reminder. Hey Tony, you've got 9 to go. But this is also a good reminder to say, hey, if you get 1 to 3 winners in a row, you're back to break even. You get 5 1 to 2 winners in a row, you're back to break even. At that point, at that point, once you're at break even, 1, 2, 3, 4 trades and you're at 100K. Oh, you're at 10% growth. You're 110K. So it goes exponential on the way up by doing this risk method, and nice smoothing on the way down. Because what we'll find is that if these current trades are winners, the account balance will be close to 98,000. So it'll only be 2% down. And at $98,000, that's $4,000 until max drawdown. So if I'm risking 10% of the max drawdown balance, then the next trade's risk will be $400. So then that's how it gets exponential on the way up, because it's always dynamically changing the risk. This works for me. It might not work for everyone. I know, one of my, mentors, guy that I absolutely, respect and follow him all the time, is Dan Chung, CEO of CK Capital, WChamp. He doesn't believe in dynamic risk. He doesn't believe in dynamic risk. But For me, I do. For me, it works with my psychology, and that's why I want to be at it. I want to know that if I go on a losing streak, I'm good, right? If I didn't have this model when I had, if I didn't have this model when I had this, the account would have been breached here. If I was reaching 1% per trade, I would have been out at this point. It was a 1, 2, 3, 4, 5, 6 trades, would have been gone. But the fact is, and that's okay for some people. This goes back to what I was saying. Some people are okay with that. They're okay to just go, oh, I'll just go hard at the start, and if I fail, I'll get a new account. That's okay. I'll just buy a new account. Man, it ain't gonna work that way. You need to be able to prepare yourself to trade live capital, and you can't just buy your way out of drawdown. That's my approach, man. That's totally my approach. Yes, I'm okay with buying new accounts as well if you get in drawdown, but not going to be abandoning this one. I'll buy other ones to start off at a higher level, but I'll be trying to get this one out of drawdown as well. I'm not just going to abandon this one. We got to develop the skill set of getting yourself out of drawdown. So this risk calculator has kept me in the game. This dynamic risk model, I call it my buffer method. It's kept me in the game, right? And for me, I'm still in the game. If I can get myself out of this drawdown on this account, man, that's all you need. That's the fire you need for your confidence to be able to then just go to the next level. So yeah, this is really nice to have in front of my face every single day. I don't really use this leverage-based position sizer. I just do that straight in MT5 or C Trader, but I just have it here anyway. It's all the formulas are in here, but all these are formulated as well. All right, so it tells me based on the next trade that comes in, this balance will update the balance here, my current balance, and that will go straight across to here, my current balance, and then that works out 10% of the remaining drawdown, which is this. But if the remaining drawdown is lower than $3,000, my risk floor, each trade will still be risking $300, which is why it's saying, yeah, your remaining drawdown to buffer now is 2,664, but your next trade risk with the buffer, with the floor, is $300. So it's beautiful. This just tells me, and if I just look at this and go, okay, what am I risking next trade? 300, great. Like I said, if these trades are in at the moment are winners, this will be showing a more of a dynamic number. It'll be showing maybe $385, and then that's the risk I'll use for the next trade. So for me, this is the savior. Your risk management, your risk model is everything. Your strategy is everything. Both of these, it's all just as important. Your psychology, your risk model, and your strategy. You need all of them. You can't get by with just having one of them perfect. You have the perfect strategy, but shit mental and shit risk model, you're not going to make it. If you got awesome psychology and awesome risk model but a shit strategy, you're not going to make it. You need to have all three, right? You need to have all three. And I never really focused my attention so much on my risk management as I do now. I've always had good discipline in my risk management where I'll risk 1% per trade or 0.5% per trade. But it's like I now have taken it to another level where I've done the model calculations to see how my drawdown is going to look and how my growth is going to look. So, man, this is the professional level I have felt that I need to take this in order to, get 7-figure funding and upwards, but not just funding, it's building your own account. Like I've traded at an institutional level, if you want to call it. I've been a fund manager for a trading company here in Australia, and doing that didn't help me as a trader in developing my edge. All it did was help me understand that you need to treat it more professional. If you're a retail trader doing it for yourself, you got to treat it like this is your full-time job or your own business, because that's what it is. It's not a hobby. And if you treat it like a hobby, you're going to get hobby results. This, to me, is the level of professionalism I need to have for myself so that I can actually make this work as a retail trader. I'm not getting paid a salary anymore working for a fund, right? I'm only getting paid now when I fucking make money as a trader. So this to me is the professionalism I need to have. And to be honest, everyone needs to have. If you don't, then you're not going to make it, right? So yeah, I'll leave that at that. But so there's our trades. Let's get into trading view. I think I've already got it here. I'll just drag this across. Yep, beautiful. Ah, beautiful. So this is the Euro USD trade I'm in right now. Now you can see take profit is here, right? And I've got all these levels marked out on my fibs, right? So I've got my break even point. So when price comes up to this break even point here, I move my stop loss to break even. The target is only at 1 to 2. Now it can be more if it's a trendy move, but this is not a trendy move. Like look at this, this is a 4 hour. It's not a trendy move right now. So I'm not holding for 1 to 3 or 1 to 4 or 1 to 5. I'm just taking the move that it's giving right now. So this is nice. It's up a, where are we at? 1 to 1, just over 1 to 1 right now. But I'm just letting this play out as it does, right? Now, EuroCAD was the other one. This is the one that I showed you guys, right? The one that was, I moved to break even. This is the break even point. So entry was beautiful, hit my break even point. It's come back. I've moved my stop to break even. It's come back literally and bounced off it. And now it's coming back up. I'm still in it on my other account, my live account, which is good, but it's still a failure. It's poor execution. It's getting lucky here. I'll take the luck when it comes, but I don't want this to be a norm. I don't want this to happen on a reoccurring basis because that's gonna create really bad habits that I do not want to have. I'll keep tracking this rule of mine, whether or not this is based on market conditions, whether moving it to stop loss is the right thing to do. Right now, based on my back testing, it is the right thing to do. More often than not, once it hits this level here, it's going to come and take me out at stop loss. So that might change. So I'll always keep evaluating this rule. And if it warrants changing, I'll change it. So yeah, bouncing nicely. Now, I will go in, I'll talk about one of these actually. But GBP USD is the other one I'm in. And I actually had a loss on this last week. I had a loss on this, but I've got a new entry based on here. And I got in yesterday, yeah, last night, after this 4 hour closure we had. And as I was asleep, price came back, wicked into my entry zone. And it's not quite a 1 to 1 right now, but it's a winning trade. It's in profit right now, I should say. It's not a winning trade. Now, I will say this. I'm looking at this short right now on GBP JPY. So if you have a look at the daily, right, you can see here, this is a 1 hour, sorry, 1 day supply zone. You got this bullish candle followed by a very strong, impulsive and explosive bearish candle, right? Bearish move. So this is where your true supply zone is. And price has come up and tested it. Was that last week? Was that Wednesday the 8th of October? Let me just get this volume out. Just came up and tested this area, right? So once we've tested it, cool. We've hit some kind of resistance at this supply zone. I'm not just selling there. My entries and my analysis needs to be on a 4 hour, but that's always good to see. We've got a rejection from here. So on this rejection, price has then created another daily supply zone, and price has come up into it. And inside this daily supply zone, we have a look at the lower time frames. So I just deleted that daily one just because I don't want all these colors. So inside that daily supply zone, we've got a 4 hour supply zone, which is what I'm looking for. That's my key. That's what I need to be seeing. I need to be seeing rejection of the 4 hour supply zone, or if it's on a bullish move, a demand 4 hour demand zone. So we've got that rejection. Bang, beautiful. Got the rejection in here. Now we had rejections here, here, here. Now I didn't get into those trades for a number of reasons. But what I am waiting for now, I'm waiting for price to close under this level on a 4 hour, right? And that's because, well, there's a number of reasons I'm not going to get into, but if you look at it on the daily, sorry, on the 1 hour time frame, what I'm looking for is I'm looking for this level here to be like confluent with an area of support that it's breaking under, which is true. We've got this level here. Right? These aren't quite tests, but this area is here. This area is here. right? This area is here. This area is here. So we've had a rejection at this 4-hour supply zone. We are now having on the hourly, we're going to be having a break of structure on the hourly. So we're going to downtrend on the hourly, and that's confluent with these with this resistance zone. We're getting liquidity by coming into a supply zone, and once we get 4-hour closure, I'm going to be looking for a move like this. This is what I'm looking for. I'm going to wait for a retest, and I'm going to target this area here for a 1 to 2. That's what I'm looking for on GBP JPY right now. Now, I would love for this to go up, but this is the same move. Pretty much the same move. Piss off. All right, I get this away. Now we've had this daily candle, right? Bearish candle followed by a strong bullish move, big strong candles, and then we have price come in and test this area, right? Testing it for demand, for buyers, right? Now I was ideally waiting for price to come in and test this area as well. This is the 4-hour demand zone, but we've got the move. Well, I got the move. I shouldn't say we. I got the move when earlier, because I could see that price was bouncing here, and on the lower term time frames, we're in downtrend on the 30-minute. Here you got a bit of a change in structure, up, and then leveled off down here. So we're got an uptrend here. So that's why I entered here. So we had the change in structure, and I believe so. We probably had a 1-hour demand. No, we didn't. 2-hour. No, we didn't. But we got that entry down there. We got that test of the demand zone down there, and price is playing in nicely off it. So we'll see how that one goes. But all these trades are the same. It's the same exact strategy. That all I'm waiting for is the same thing. I'm looking for liquidity into a supply or a demand zone, either on a daily or a 4-hour time frame. I'm looking for a change of structure, and I'm looking for price to break above or below a support or resistance level. So there's multiple confirmations I'm waiting for, and I've got them on all of them right now. I'm going to be waiting for this closure in the next 25 minutes to see, and then if it does, we'll be entering a short right here. I'm not saying that this is going to actually play out and win, but I know the odds are in my favor. For this to be a winning trade. We're looking at the same on CAD Frank. I didn't get into this trade just because the spreads were fucking poor on a Monday morning. When I opened up here, the price opened up pretty much Monday morning into my entry zone, and I don't like that. If the price took its time to come back up here over Monday, I would have entered my short here and we would have been up in profit. But yeah, price, as you can see here, Monday 7 a.m, it was already right at this level. That wasn't good to me. I didn't like that. So, but it's something I'm still looking at. Anyway, that's all my charts for now. Hope you got something out of this video, whether it's the risk model or a little bit on how I place my trades. But man, please share how you're going with your challenges, how you're going with your trading in the comments. If you want, message me on Instagram. It's Tony Strugar Trades. I'm much more active on Instagram in the DMs, so I know we can't really chat much on YouTube, but send me a DM, tell me what you're doing, let's connect, because we're all here to make this together, right? We're all here to win. It's not a I want to win and I don't want you to win. I want it all. If we're all wanting to be, professional traders, then let's all go and get it. So thanks for watching, like and subscribe, and I hope to show you more good results in week 5 next week, and we'll see how these trades have come together. Hopefully they're winners for us. But peace out, everyone.